Indian stock markets have rallied this morning. Our NDTV profit team has been tracking all the details very closely. In fact, I must inform you that the Nifty and Sensex opened more than 1% higher this Monday morning. So the key equity benchmarks traded with strong gains in early trade amid the outcomes of the Maharashtra and Jharkhand elections. Additionally, macroeconomic indicators, including the GDP and infrastructure output, will garner significant attention. But the Nifty and Sensex have opened higher this morning. Meanwhile, Adani Group stocks posted significant gains during morning trade. Adani Energy is leading the rebound is what the markets say so far. The Adani Group stocks have risen. There's a strong recovery is what analysts are saying by the Adani Group companies. And as I mentioned, Adani Energy is leading the rebound as we speak. My colleague Anushi Vakharia joins us from NDTV Profit at the moment. Anushi, now in the past, the Adani Group had announced plans to invest more than 8 lakh crore rupees across portfolio companies in the next 10 years. What's the status? What's the state of affairs at the moment? The stocks are rallying nearly 8% higher.
So for Adani portfolio, let's just break this down in different brackets. Now, first we are seeing about how the EBITDA, about the cash flows, about the debt levels, and what this could mean for the business forward. So firstly, over the last 12 months, we are seeing an EBITDA growth of about 17% to $10 billion, which means strong EBITDA growth levels have sustained over the last 4 quarters that we are looking at. This has translated into the cash flows, also $7 billion of cash flows for the last 12 months, a 30% growth that we've seen in the last 5 years. So growth in cash flows from operation is strong and has also sustained, as we've mentioned about EBITDA. So net debt to EBITDA now, if you look at, that has remained in the 2.46 times, which is lower than what the company has given its guidance for. So this suggests reasonable levels for asset-heavy infra companies. That is what we are looking at for. Liquidity position also across the portfolio companies remains strong with sufficient funds to cover all the debt repayments within the next 12 months that we are looking at. So healthy liquidity to cover the debt repayments. Now, these debt is to be repaid for each year until FY34 is less than the cash flow for the last 12 months. This means that even current cash flows are assuming no growth at these levels should be sufficient enough to cover all these debt payments that we are looking at. Asset base, if we look at, that has increased by $9 billion to $60 billion in H1 FY25. That's the first half of fiscal year 25. During the same period, gross debt has increased by over $2 billion. So we are seeing a significant increase in asset base as compared to the debt levels. So 80% of this base is funded through internally and not through debt also that we are looking at. Equity now counts for about 63% of total debt, showing about lower dependence on debt that we are looking at. Now, if you are to see the exposure to the Indian banks, at USD $11 billion, this is 42% of today's debt. So companies have cash of about $6 billion, most of which is parked with Indian banks. So this means net exposure to Indian banks is much lower than what is perceived in the market, since more than 50% of the debt is cash lying in the Indian banks. So this is the overall update that we are looking for the Adani portfolio.